Forward it. Share the screen. And Paul, if you got any questions, obviously jump in whenever you want to. Or sorry, not questions, but comments. All right, can you guys see my screen? I guess someone just, put in the chat yes or say yes on the microphone. Yes, cool. All right, excellent. So yeah, this presentation, the reason that we're here, go over the GammaEdge Framework. What is the GammaEdge Framework? The GammaEdge Framework is kind of our methodology of how we see the markets through the options market. Specifically, we have three main pillars that we break down in the GammaEdge Framework in the bachelor's section. Master's section goes into detail on how to apply that to single stock trading and forming your kind of market bias for the day. And then the doctorate section goes into more zero DTE trading. And then the extracurricular section is just kind of a hodgepodge of random topics. So what I'm going to cover just here quickly, probably going to take 5 or 10 minutes. It's, why we believe the options market matters, problems we solve, how we solve them, who GammaEdge is and isn't for, and then the tools that we use to do all those things. So just quickly, why does options market analysis matter? So it's our belief that the tail wags the dog, and this is kind of a graphic representation of why that is. We've just seen an explosion in options since 2020, and specifically in the near-term options. I think I saw a stat on Twitter today that yesterday, 54% of all options volume happened in the zero DT, which is it's nuts to think about. So even if you don't believe that the tail wags the dog, meaning that the use of options is driving the stock price today, you hopefully can at least believe that the options market does play some factor because of the amount of capital that is used to express opinions to that. So at least kind of having an understanding of what is happening in the options market would suit you to certainly understand on a day-to-day basis. So the problems that we solve, again, this goes back to our 3-pillar framework. Market sentiment, that is simply how we use that is understanding the battle between call and put speculation. As this chart shows right here, it's our belief, and we see it time and time again through our dashboards that we'll hit on in a second, that out-of-the-money call and out-of-the-money put speculation is what drives market behavior. And so just understanding who is winning that battle between, okay, are calls being more aggressive, are puts being more aggressive, and then kind of understanding, okay, are we super long to one side, super short to one side, and just understanding kind of what that sine wave of speculation is doing. Secondly is market trend. For this, we use, we have 2 models. One is the market trend model. I kind of think of that as the swing model. That's built off the tick index. Again, we will hit on this in a minute. And then we also have an intraday model, which is built off of intraday volume analysis of what the call and the put speculators in SPX 0DT are doing. And then lastly is market structure. Again, this is where we look at the options structure through our dashboard to understand where are the key sensitivity points in the market. If you've read it, our transition zones, plus and minus SKEX, which are the key kind of short-term targeted levels, just understanding where all of those are happening and understanding, okay, if price moves through or breaks through one of these levels, what is kind of the associated reaction that we would expect for that to happen. As an example, if you've been reading, through key trends, we would expect a further increase higher, just in its most simplistic of views. So again, how we solve these problems, our tools, which we're going to hit on, our community, and then our education. So our education, the GammaEdge Framework, that's what you're reading. The tools, that's our dashboard, that's our market trend model, that's our Discord bots, our scans, all those good things to really really just focus on what is the options market telling us. Then we run it through our models and we spit out just a very simple export for you guys. So, you guys don't have to be experts in this. We kind of do the work for you. It's just really you guys understanding understanding kind of what the data is telling you and then implementing it, which is exactly what our GammaEdge Framework is meant to do for you guys. And then our community. So our community, we have a couple hundred traders in it, all different skill levels, all different points in life, professions. We have people with 9-to-5 jobs. We have former market makers. We have professional traders. We have, sophisticated private traders, all that good stuff. So, and it's very collaborative community. We're talking all day. Paul, Michael is in the voice chat, a lot of the day. I try to pop in and pop out. And, we're making content for you guys every day as well. So who GammaEdge is for, again, 0DT traders, futures traders, equity traders. We are good for all of that stuff, to be honest with you. Then who we are not for, if you're looking for simple entries and exits, we're probably not the best for you. We tend to teach you how to fish. We're not here to fish for you. That's just to make sure that you guys learn this information, understand it, and if we were to be hit by a bus one day and didn't come back, you would still understand how to use the system and be successful with it. And then the only reason I just put under $25,000 accounts is because of the pattern day trader rules. We just simply say this because a big emphasis of what we do is 0DT trading. And obviously, with under 25K, you only get 3 round trips in a 5 or 10 day window. So that's obviously not ideal. This isn't to say that you cannot be successful with the tools that we use, because our tools are kind of a complement to any existing trading system. So, if you're under 25K and you have a great system, then we could be an overlay for you as well. And then common FAQs. So do you have to trade options directly to benefit from GammaEdge? Absolutely not. As I just said, our methodology is understanding broad market dynamics. It's not just trading options. So, if you're an equity swing trader, understanding the sentiment of the market and key levels, you can still execute using stock. Examples like that. And then do you have to be a day trader? Absolutely not. Again, I do swing trading, so that's kind of a multi-day to multi-week strategy. So again, if you are a 0DT trader, you are a multi-day trader. Our system is complementary to likely whatever you are doing. And then can you benefit from GammaEdge if you have a 9-to-5 job and limited time trading? Yes, absolutely. Again, what I was saying earlier about our tools and our kind of pre-market analysis that we prepare for you guys is meant to, if you have 20 minutes or you have 2 hours, you should be able to use our tools to kind of get the information that you need, get in, get out, and then go about your day, do what you need to do in terms of your trading and stuff like that. So before we get into the tools, Paul, Michael, you guys have anything just on kind of the general overview of GammaEdge? I will take
No, I don't.
Okay.
I think you covered it pretty well.
Pretty well. So next time, hopefully I get well.
No,
So
no,
so, no, all good.
All good.
Just messing around. It's late on a Friday. So going back to the tools that we use. So this is kind of our core bread and butter tool. This is what we call, this is our web app dashboard. You can think of this as a representation of the options market. So over here, right-hand side, all these purple panels, these are your expirations. If it's highlighted in purple, then it is in the scope of this analysis, and you have the ability to click on, click off, whatever, kind of expiration you want to focus on. Just in this example, we have all expirations turned on. And then from here, looking at each of these columns, it's really just a representation of, we can understand by strike and then kind of the overall complex, what is the delta at the strikes, what is the gamma impact at the strikes, and then also above and below spot price, kind of an aggregate, looking at open interest by strike, which then really is key in driving, the delta and the gamma aspects at each of the strikes. And then again, we use these dashboards to focus on sentiment and structure. So just hitting on sentiment real quick, just a quick glance at this, you can see a lot of the green. A lot of the green means that this is a call dominated structure. And then going back to our sine waves, right? Okay, put dominated structure, we think it's kind of more bearish, which is sideways to downways action, just because put holders are being more aggressive. And then the opposite is true for call holders. If call speculators are being more aggressive, committing capital up and out in price, that is generally kind of a bullish sign that the market as a whole is, putting their money where their mouth is and expecting higher prices. So just flipping back and forth between these two, this is kind of the beauty of the dashboard is it's really clean kind of visualization of the options market. So we can clearly see, and again, just keep in mind, these are not current screenshots. They're just meant for representations in nature. But this is the IWM from April of last year. We can see, in the belly of the options market is what I call it, kind of right around spot price. We see a lot of red. So puts are in control, no doubt about that. And then, moving back to, this is just an example of Google from the same time period, which is, great to see. So small caps obviously not performing well here, or maybe not performing well, but, the call speculators certainly not interested in this name at the time. Google at the same time, ton of green. Call speculators are dominant above the spot price. So that is a great sign to see, right? And then the other points is just looking at structure. Again, here we have highlighted for you, as you read the GammaEdge framework, you'll get more familiar with these terms and how we convey them in our dashboards. We have the transition zone. That's this white box. So that's P-trans, spot price above P-trans. And then we have these little dots here. So this dot over here, that's plus GEX, which just means that's the strike with the most gamma, which is kind of, I think about that as kind of in the short term, where are the speculators kind of the most piled into or targeting. And then over here with the call OI, this is, sorry, I just needed to mute that real quick. This is just in absolute terms, where is the most call open interest. And again, in the GammaEdge framework, we go through, multiple examples of the significance of those strikes and understanding, okay, is if plus GEX or COI is above or below spot price, why that is a good thing. Again, here, just lastly, rounding out the web app, IWM is just a bearish example for you guys. Paul, Michael, y'all got anything on the web app? Oh, good, cool, okay. So next, moving on to the market trend model. This is where the market trend pillar, obviously by its name, comes into play. So this is built off the tick index, and really what the tick does is that measures, just in simplistic terms, buying and selling in the market. So, when you're buying, generally creates upticks, and when you're selling, generally creates downticks, and that's what the tick is measuring right here. So you may be familiar, if you go into trading view and you type in tick, T-I-T-I-C-K, that's the tick index. What we do is this model just creates a time series out of that, so we can understand kind of over multiple days, multiple weeks, multiple months, what is the trend of that doing. And then we have a short-term and a long-term moving average ribbon built off of that. So again, we can just kind of understand, okay, at a glance, what is the long-term trend? What is the short-term trend? And that just kind of puts in context within our system, for more favored to be, sideways to higher, sideways or sideways to lower action. And then also on an intraday basis, we have something that's called the filter tick. So what that does is that measures, so if you have a tick reading of plus or minus 1,000, that is a benchmark accepted broadly by the market. That is significant activity. So like in this example, or even today that we can show you guys after this presentation, that represents significant buying. And when we see that throughout the session, like we did today, that is obviously significant buying. And then vice versa to the downside, that would represent significant selling.
Fun part. What's up?
You guys got anything on this, Michael or Paul? Good to move on. All right. Yeah, so again, I just wanted to show you guys a quick example of what a bullish and a bearish structure looks like. And again, we can pull up the one from today to look at kind of the transition that we did see. But again, clear selling here, the trend of the cumulative tick, all the moving average ribbons are lower. Going back to this example, obviously everything is bullish, again, bearish. So the way I like to think about that is we can combine our web app dashboard to understand, okay, our calls or puts in control. Then what we can do is we can move to our market trend model to understand, okay, is the trend of price, is that persisting to the upside? Is that persisting to the downside? Is that talking to our web app dashboard? So if you guys don't care about anything else with this, that would at least be helpful to know. It's like, okay, check. Yes, calls are dominant. Yes, the market trend model is, persistent to the upside. That is a favorable market for, continuation higher. And then vice versa to the downside. If puts are starting to be in control, if we start to see the market trend model rolling over, then that's kind of an indication of, hey, okay, I should probably let my foot off the gas pedal a little bit, lock in some profits if you're long to the upside, or if you're interested in shorting, maybe it's a time to start looking at that. But at least it's a warning sign for you, if nothing else, that hey, the market is starting to break down here. And then I just wanted to show you, just real quick, looking at the market trend model today. Can you guys see the market trend model from today? Or are you still looking at the presentation? You guys can see the market. Cool. So yeah, so the last couple of days, well, I mean, it's been it's more than the last couple of days. It's been for a long time. We've just kind of had this persistent downtrend in the market, in the cumulative tick. You can see here, we've seen most days have been net selling on the filter tick, and then today we got a reversal right off the open. Not our favorite reversals right off the open, but we don't need to get that granular today. We can just talk about, we just had what we call linear up day, significant selling throughout the day, or buying, sorry, throughout the day as well. So, this doesn't mean that this is the reversal and we're going to move higher from here, but we got to start somewhere. So, from here, it's just important to see day over day. Okay, yes, do we continue to see that trend strengthen higher? And then also, do we start to see the web app and the SPX start to see more calls dominate those strikes? Because before today, and before then, it's a lot of put speculation. If you guys have been following, tweets and stuff I put out, you can see those dashboards. If you're not a member of GammaEdge. So we want to see, is the market starting to rotate back and the call speculators start to come back into play. And then again, this is our, well, not again, I haven't talked about it yet, but this is our short-term model, what I was talking about, our intraday volume analysis. So simply put, what we're doing is we're looking at the distribution of call and put speculation throughout the day. And what we can do there is that really just helps us understand what the character of speculators are doing, and therefore kind of the character of price action. So in this upper left-hand corner, and this is what we saw today, our call speculators speculating higher and higher throughout the day. Are they speculating lower throughout the day, like in this right-hand corner, kind of a downtrending character, uptrending character? Then we have a sideways trending character here. So this is powerful as well to understand, yes, okay, what is the 0DT crowd and the SPX doing? And then we compare that with the market trend model and the cumulative tick on an intraday basis as well to understand, like, okay, like today, we were expanding higher all session. We saw those significant ticks expanding higher all session. Let me show you that just real quick. Well, there's the movie, you guys watch out, but this is just the end of the day. And yeah, this is kind of hindsight, but whatever, because these run live throughout the day and we're running these on 5-minute intervals. So you can see this. But yeah, kind of see the puts expanding throughout the session, which we kind of imply as puts closing, and then calls more or less are kind of sideways to higher throughout the day as well. And then pair that with, again, the market trend model, which was showing significant buying throughout the day, reversal off the open. So that was a good kind of indication on the day that if you're trying to short kind of an oversold market, probably wasn't the day to do that, especially when we cleared the key levels that we talked about in our pre-market analysis in the SPX. And then, yeah, these are just other various Discord charts that we talk about in the GammaEdge framework. We go over the GEX ratio, the net stat, which is, understanding sensitivity points in the structure. And then another way to look at, the dominance of call and put speculators. And then this is just kind of a web app representation in the Discord as well. Obviously, it's not clean, not as, kind of sexy looking as the web app, but it's still useful as well too. And then for the equity swing traders out there, we have various scans that we leverage on a day-to-day basis. Again, they are based on the principles we've talked about call and put speculation. So the two scans here, call dominated delta, put dominated delta, they are what they sound like. Call dominated delta, we're looking for those stocks that are call dominated above the spot price. And then vice versa to downside, those tickers that are put dominated above and below spot price. And then you can kind of look at the ratios of those over time to see, okay, are there more call dominated stocks, more put dominated stocks? You can kind of use that as a sentiment gauge as well. And, it's just super useful. These are kind of your list for the day, more or less. Today, as we started to see, the market break higher, move over to this call dominated list, see what stocks are performing well. And you could have also seen today that on the put dominated scanner, those stocks were not going down today. Those stocks were moving higher as well. So those are just two kind of good ways that I like to use these scans. And really, at the end of the day, it kind of takes the thousands of stocks out there and it kind of distills it down into, hey, look over here, shining a flashlight on, hey, these stocks are very constructive. You know, if you're bullish, call dominated, and if you're bearish, kind of look at these put dominated stocks. So next steps, obviously, if you have not read the GammaEdge framework yet, that you should do that. Again, you know, there's probably, I don't know, probably 15 lessons or so about everything that we just covered. So if it's foreign to you, I would encourage you to go through this and, you know, read everything. We have text, we have videos, all that good stuff for you guys in there. And then with that, yeah, that's kind of it for the formal presentation. Again, you know, here's everything of how you can contact us, you know, everything that we have available for you guys. So yeah, let us know if you have any questions about what we talked about today. Happy to answer now. The time is yours. And Michael and Paul, if you guys have anything you guys want to talk about, we can do that. So yeah,
I'll just say the the vol m command where those lines were sloping up today, and then in conjunction with the CT, and then in conjunction with the web app. Those were the magic elixir today for lots of people, including myself. I spent most of the day curating trades and just showing what I was doing most of the day with that, and ended up having the plan that we had put out this morning as almost to the T executing. And so this chart that's on the screen right now really told us what was happening earlier in the day, and then being able to, yeah, you can see the movie right there. As things started to sort themselves out, and you can see how puts were being closed. That's that upward sloping red line because price is going up. And then you can see the calls, very, very tight distribution, and basically stabilizing out. And it gave us a really good indication. If you notice, the price stayed between those lines for the majority of the day. It gives you a really good indication of what's happening. Now, that in combination with the CT, the market trend model, was really, I mean, it gave a lot of credence for a lot of folks to be able to move up here. So,
yep. And that's just a 3-pillar framework, just shining through, right? Like,
yep.
Keep it simple. It's very simple.
Yep, exactly. So, no, today was a good day. A lot of people were, and we did some single stocks too. We did NVIDIA. We had opened up NVIDIA, broken wing flies yesterday, carried them overnight, and closed them today. And that also went well. And then some folks got back into NVIDIA, and were able to do some stuff up around 143, 144. So it's, you know, it's all, we don't, as you said, we don't walk, we don't spoon feed you, but when we are doing the same thing, we do share it, so that people can see what's, you know, how to put it all together, how to stitch it all together, and go from there. So
yeah, Leonard,
that's all I got.
Yeah, sorry, let me get out of this annotation tool.
So Cotton Dog's asking, you know, the behavior of Tesla today. Can you hear me?
I gotcha. Yeah.
Okay. Yeah. Cotton Dog's asking, can we talk about the behavior of Tesla today?
Yeah, sure. So, I mean, I'll start at a high level. Like, obviously, the market ripped higher. So, like, it shouldn't come as a surprise that Tesla ripped higher. For one fact, that it opened right at its kind of negative Gex level, which, again, that's kind of the peak of the downside speculation, which is a natural kind of monetization level. So if we can't take out that level, then those puts are going to start losing value very quickly. And, you know, they're going to close those puts. And then, again, just the fact that the market was ripping higher is naturally going to get it buying pressures, in my opinion, higher. And then, yeah, sorry, I'm just looking at price action. I didn't look at Tesla in transparency because that was not on the bull list today, because as you pointed out, cotton, like Tesla's been crushed lately. So even though it went super higher, that doesn't mean you should feel bad about missing it, because there were just better structures out there.
Yeah, I'll add a couple cents also about Tesla here. Let me share my screen. Don't know if it's going to let me do that. Oh yeah, here we go. There we go. So we run in the pre-market, we run, Tesla is one of those stocks that we keep track of. We call it a liquidity stock because it's very liquid. And we feel that it's under a lot of control. And so before the market opened today, this was the chart. In fact, let's just make it interactive. We have, as Taylor was describing, we have this concept of what we call delta and delta balance. Now, delta obviously is one of the option Greeks, but we've characterized it pretty succinctly. And just what I want you to, kind of take away without getting wrapped around the axle is that when delta is really bullish, which is up here, price tends to go up. And when delta heads to the bearish side, price goes down. So as Taylor just said, Tesla was not one of our stocks that was hitting on the bull screen, and wasn't necessarily on the radar. But what's important about this is that we track it, and we also track out in the future. Won't get wrapped around the axle what all these different lines mean and everything like that. But just suffice to say, we started the day in Tesla pretty beaten down, and the future, looking out here on the right hand side, actually has the monthly looking pretty bullish, but the path between now and the monthly not so much, right? So I think that's important. The other thing, when we call up Tesla in this, this is the end of the day because I don't have the early morning charts on this. You can see we're in some green. And if you've done the framework, you know that that's call dominated area. And so we did move up today. We moved up fairly aggressively today. And that's pretty interesting. So my point to show all this is, how do we bring the tools together to show you kind of intraday what's going on? So you can't see what I'm doing here off screen, but I'm going to just type a command just to look at that intraday action here. And that's a command that we can type in the Discord. It's called vol-m. And vol-m, I haven't looked at it, so I don't, the guess here is we're both going to see the same thing at the same time here. Vol-m's interesting. All right, so it's on the screen now. So these little spikes here, these are put holders who are panicking and getting out. How do we know that? They're out of the money. And for all intents and purposes, what's generally happening is price is lower left, upper right. It's drifting upward throughout the day. Calls are transacting. That's what this green line is here. And so what this takes away is that even starting bearish on the day, pre-market, our tools are able to say, here's the status, here's the snapshot right now of what the market can do. And then as the day unfolds, because a lot of these stocks, these liquidity stocks, are heavily influenced by the options market, we start to see what's going on here. And you can see that Tesla actually stayed within the channels, right? We call these the chopsticks. We have one of our users calls it chopsticks. And we stayed within that, and they both had a positive slope. What does that mean? It means that in general, when the price is moving up, that calls are being added, puts are being closed. And sure enough, as we look at Tesla, we can see we started somewhere down in this area and we moved up in price for a good portion of the day. And that the structure now, with the 3-10 or 1-3 January 3rd rolled off, we're now looking at overall, what's out in front of us starting from 4 o'clock onward. If we look at just next week, still very, very bullish from today's perspective. And next week, kind of thinking how they're all sequenced together. Maybe not so bearish, still in a good shape, but you can see now this box is starting to highlight kind of a neutral area, a pause area, however you want to look at it. So our tools will help you kind of bring the picture together and make some decisions. Everybody's self-directed. And so we will certainly answer questions about stocks and what the tools are doing and all of that stuff. What we don't do is we don't tell you to go long or go short, and position size and risk management and all that. That's up to you and your account size and what you bring to the table. Last thought, we want this to overlay whatever methodology you have. It's not necessarily to replace, although it can replace, and for many of our traders, it does replace. For me, it replaces. I rely almost exclusively on this now, but that's me. So, you do you, and we'll be there to help you figure it out.
Yep. Sorry, you asked that question again. Colin, does that answer your question? Is that clear? Yes, thanks. Yeah, awesome. I mean, there's other tools, we could go through, like the GEX ratio that was washed out. We don't necessarily need to go through that right now, but
yeah. He's also asking about the 400 strike, and the 400 strike.
Oh.
Let me just run a H command on this real quick. I just want to see what 400 was before the day. I'll open it up on the other screen here in a second. Let me just see what this is. So our H command is a history command. It just gives me all the GEX levels from a historical perspective.
That was pre-market plus GEX too, Paul.
What's that?
400 was pre-market plus GEX as well in Tesla.
Okay.
I don't know if that's what you're looking.
Yeah, so here's the history on Tesla, and yeah, so it looks like we're still very, very strong, right? No question about that. Doesn't look like I have the print bar for Tesla here. Let's let me look here at something else. Just looking at the EM command here. I just want to see what it looks like. That's after the close there. That's why. Let's see. This morning, this may not be as easy to get my fingers on as I thought it would be. Okay, well, here's the 10 o'clock. So, yeah, this chart, this is another tool that we have. So this was run automatically at 10:37 Eastern time. Price was still down below this thing, and it was telling us these are not support or resistance. These are just really points of inflection. And it was telling us that if we get above the 400 and the deltas, that we're going to start moving a lot of deltas underneath us. So think of them as support. And then the same thing, as we start taking out the strikes below, we start pulling calls into support mechanisms effectively underneath us again. And these are the second order Greeks. These are the ones that show you a rate of change due to something. This is time right here. And you can already see, starting off the day, early in the day, we were starting off with more supportive charm underneath us, which means that we're in this mode of causing the dealers to be short effectively, and increasingly short as time goes on into the day. And so as price goes up, we're going to be kind of taking away from this and putting it over here as we go across the strike. And the way to think about that is that as we continue to go up, we get more and more supportive. And so it all starts to, I don't want to say conspire, it's not a conspiracy, but it all starts to flow into a thesis about what can happen. So you could start the beginning of the day with Tesla and say, hey, if I take out these levels, certain things are going to happen. In fact, that's what we do in our single stock analysis, in our SPX analysis for 0DTE. We go through those things. And I think at the end of the day, the thing to take, to just be aware of is that we're going to be, since we're already dominant in certain calls or puts within the structure, as we start moving up, if we move up for a number of reasons, and we saw what the vol-m command was showing us, that there was transactions on, price and everything on the way up, we're going to start sweeping more calls into the structure underneath us. And if you've done the framework, you understand that when you start pulling calls underneath you, just due to charm and due to other phenomena, you become very, very supportive to move up. And so that's part of it without, going into a great analysis on Tesla. I think it's all here. I think the data does support that Tesla was in a really, really good spot. And then with all the volume that we had today for Tesla, I think it's pretty apparent what was happening there. One other thing here that I'll leave it on this. I have another command which looks at the volume during the day, volume distribution during the day for the 0DTE. Why this can be important is that the shape of that volume distribution can give us some insight now. This is, see what this looks like. You can see a couple things here. So throughout the day, you're looking at this. This is where all the transactions were today, opening and closing. We have no idea which is which. You don't get that from volume, but what you get is where folks are targeting. And why that's important to you and important to your trading is that price generally doesn't go where there are no transactions. So, deep out of the money option buying and then hopium that you're going to go there is usually not a good strategy. The thing that this tells us here, and you can look, these are the volume numbers, and you can see your eye can kind of follow, ignore the spikes. It can kind of follow what this looks like here. And you see a couple things. You see that the bottom here, the puts are a little bit wider, fatter tails, and a little bit more spread out. And that is characteristic actually of folks closing. And they're not closing in a targeted manner. They're realizing, this is the fear component of the fear and greed, the sentiment, that their puts are not going to be in the money. They're not going to hit their targets. And that can be a problem. And so then we start seeing just wider distribution of that. We also look at the magnitude here, and we can see that the bell curve is underneath here, it goes up over 50, right? 50,000 contracts per strike. Here it's underneath the 50. Now there's spikes, of course, but my eye tells me that activity was more on the call side. When you see more activity on the call side than the put side, and it has a tighter distribution, this looks like a bell curve, or think of literally a bell, right? This is telling me there was a lot more speculation to the upside. So if you're trying to, during the day, you've been bearish on Tesla, maybe you were short early in the day. As you go through the day, you start to see these things, so you can stitch them together, and you can just look at the tools in real time, and they'll tell you what's going on. So hopefully that helps you with that 400 discussion. All right, that's all I got.
Yep, very good.
Let's see, George is asking, are we thinking of any new innovation in terms of improved tooling, integration to various trading platforms? Mike, Taylor?
Yeah, I responded to him already. I don't know if you guys can see those comments or not.
Oh, let me scroll. Oh, I didn't see it. I was scrolled. I wasn't scrolled.
Yeah, no, all good. Yeah, no, I mean, I basically told him our focus right now is
Yep.
continue to build out the web app, making that experience better for you
Yep.
guys, adding more tools, all that good stuff. So
Yep. Cool. Yeah. Sorry about that. I didn't see that.
no, all good. Well, yeah, that's, I guess, yeah, I mean, we were scheduled to go to 4:45. I don't know if anyone else has any questions. I haven't seen any come through. We've covered a lot today, so we're gonna be hosting these, for the next Thursday or Friday into perpetuity this year. So, if you think of something over the next week as you're reviewing the GammaEdge framework or all that good stuff, you can obviously ask us, or we'll meet back here next week and you can ask us then. I mean, you can find us on Twitter, newsletter, reply to that. There's a million different ways you can get in contact with us, and our response time is generally within a couple hours. So not that I want to set that expectation, but we're pretty good about it. So with that, we appreciate everyone's time. Thank you, Paul. Thank you, Michael, for showing a pretty face for us. But let's see. Will the first part of the future presentation be? I mean, yeah, it really depends on the audience. Like if it's the same people that are on next time, then no, we don't need to go through it. But yeah, generally it probably is going to be somewhat the same, of 5 to 10 minutes of just going level setting. And I mean, to be honest with you, there's nothing to build off of because this is our framework and we covered the framework. So in terms of building off, that's going to be dependent on the questions that you guys ask us. We can go into that and the detail there. Does that make sense, Cotton? Yeah, awesome. Okay, cool. So with that, don't think there's any more questions. So thank you guys very much for attending on a Friday afternoon after holiday week. So hope you all have a great weekend. We'll be posting this. Yes, I'll be posting this, send an email out to you guys with the recording, all that good stuff. And it'll be embedded in the Notion document as well too, and as well as all the old ones that we've done. So yeah, awesome. Appreciate the time.
Last thing. Yeah. Make sure you guys are following us on X too, because we do X Spaces. Jump on those impromptu too. So those, make sure you get notified, sign up for notifications on that too. So
yep, 100%. So all right, y'all have a good weekend. We'll talk to you later.
Yep.
Bye.
Thanks, guys.
See you.
Bye.